Could higher oil prices actually boost the U.S. economy? And what might this mean for the future of the global oil market? These are the questions we're exploring today. Josh Young, a prominent figure in the energy sector, proposes a thought-provoking perspective. Higher oil prices could benefit the U.S. economy. This may seem counterintuitive, given the Biden administration's preference for lower oil prices. However, it's important to remember that the U.S. has grown into a major oil exporter, and higher prices could have significant economic benefits. This leads us to a fascinating geopolitical tug-of-war. On one hand, we have Saudi Arabia, a country eager for higher oil prices to fund ambitious projects like Neom City. On the other, there's Russia, which might prefer lower prices to politically undermine the Biden administration ahead of the 2024 election. Interestingly, sanctions imposed on Russia have proven somewhat ineffective, even beneficial in certain respects. Higher oil and commodity prices, largely the result of these sanctions, have actually bolstered Russia's export economy. But what about the demand side of things? Emerging markets like China and India are witnessing rapid economic development and rising per capita oil consumption. This growth in demand is outpacing supply, a trend that could trigger a surge in oil prices. The oil sector is also experiencing a boom in mergers and acquisitions. The reason? Scarcity of remaining reserves and assets to acquire. Despite this boom, valuations for many oil stocks remain surprisingly low, especially compared to the transaction values. Young sees exceptional investment opportunities here, particularly in small to mid-cap oil stocks. These stocks are trading at deep discounts to asset values and large caps. Over time, if the sector re-rates higher, they could potentially yield 5 to 10 times returns. To sum up, Young presents a bullish case for oil prices and stocks. The arguments: favorable supply and demand dynamics, geopolitics benefiting U.S. producers, and incredibly cheap valuations in the sector relative to intrinsic values. The future of oil prices and the U.S. economy might be more interconnected than we think, and the potential benefits of higher oil prices could be substantial.